JB here. Hope everyone's doing outstanding. Wednesday, September 24th, 8:58 on this fine morning talk. Really quick about the market. Some names I'm looking at go from there. S&P futures markets slightly in the green here after yesterday's bloodbath. A little sense of sarcasm there. Obviously, markets sold off yesterday. S&P was down over 0.5%. Nasdaq had its worst session, nearly 1% to the downside in over a month. Uh, but I mean, right at all-time highs, right? I mean, last week more all-time highs. At some point, there's going to be some kind of pull, whether it's small ones, consolidation. It happens, right? And of course, when you're in calls, it not as much fun. Uh, but then the question always lurks: Is this the start of something bigger? Just normal, profit taking, what have you? And more times than not, you find that out down the road, right? I don't think we're anywhere near a top just yet. And when I say top, I'm not saying the SPY is going to 700 or we're going to rally another 15% from here. I just think we're either we remain range bound or we melt higher over the next couple weeks. That's kind of my thought. Not saying there could be a possibility we have a pull, right? September is nearing an end, typically the worst performing month of the year. But we're kind of like in a I use this term back in the summer too. We're like in a news catalyst vacuum right now. We do have PCE data Friday, weekly jobs claims tomorrow, the last final revision on second quarter GDP. But outside of that, there's not much. Yesterday, you had Fed Chair Powell speaking at luncheon, a moderated panel. He, brought up what hasn't been brought up before, right? And some of these Fed chairs have kind of had some snafus before. They've, put their foot in the mouth. Janet Yellen back in 2014 saying, I think she called biotech a bubble, right? Ben Bernanke said something a while ago, and now you have yesterday Powell saying that valuations were stretched, or I forget I don't have the exact word for word what exactly he said, but then it just brings into, people are going to bring that up. The Fed thinks that valuations are stretched, and at some point they are, and he always says, whenever they bring up like the tariffs or geopolitical situations, Fed Chair Powell says, "Oh no, the Fed is only focused on its dual mandate, inflation, and full employment." But they have to be looking at some of this stuff, right? And I mean, it's it'd be you would have to be naive to think that the Fed doesn't look at these kind of things. But anyway, it's kind of funny how they're bringing it up. So outside of that, it's like we're in the news vacuum. So it's going to be a headline driven. I'm watching yields, right? I think the yields is probably, if there's anything outside of headlines that can move and data that can move markets, the yields. And if the yields continue to tick higher, I just to me, again, it's just, I just don't want to see that happen, right? We also have the possibility of another government shutdown in 6 days. You have to think that's going to get resolved. So that's kind of that. So just overall markets, I put on a watch list this morning, 667 possible resistance. That's the upper Bollinger Band from yesterday, and then 660.06 as possible support. If we start breaking 660 today or tomorrow, I might look for some hedge puts. I'll talk about those in a second, but again, I'm cautiously optimistic. I use the word cautiously, but I think there'll be opportunity on both sides. But if I had to pick direction, I think we either consolidate here or we're headed higher. So that's kind of overall markets. Funny little quote in Market Watch this morning. To me, it's why sometimes you got to dismiss some of these headlines because people like to, make these comments. Today, one of the headlines says, "Here's the biggest risk for housing market than what the Fed could do with mortgage rates," right? And then they have some quotes, and one of the quotes says that home affordability problem is more of a home price issue than a mortgage rate issue, right? So pretty much the person is saying that home prices is the issue with the housing market, not mortgage rate issues, right? And I mean, to me, it's like comical. Like, do they not know how the math works, right? So, for example, I try not to use the best. Let's see if I can post it in here. Of course, I don't have it. Oh, let's see if I can do it. Sorry, but this is just a snapshot, right? So let's say you're looking to get a house that has an $800,000 house. You're taking out an $800,000 mortgage. Forget the down payment, all that stuff. So if you get a mortgage at 4%, your monthly interest rate payments is $2,600, right? If it's 7% rate, it's $4,600 interest rate payment every month, right? I mean, as obviously as once you get to year 29, 28, that goes down. But the first year, that's what it is, right? Just remarkable stuff. So you're talking an extra $2,000 in payments just to finance the home, just for interest rate. It's not going to principal. It's not going to your tax, your property taxes. Not going to your homeowners insurance. Any of that stuff. Uh, on the flip side, I mean, look at the $500,000 bracket, right? I mean, it's pretty much if you want to get a $500,000 house, you'd pay more in interest at 7% than someone who got an $800,000 house at 4%. It doesn't make sense if you're trying to make the analogy that rates is not a problem, right? Obviously, if you have a house that's $800,000 and compared to a $500,000 house, your property taxes are going to be higher, your homeowners insurance is going to be higher. I mean, it's going to be higher to maintain. But if you're just looking at affordability, to me, if you're for a home, is your monthly payments. I mean, that's not nutshells. That's exactly how it works. When you're going to buy a house, it's like, what is your debt to income? Because your debt to income determines your monthly payments of what you can afford. And if your monthly payments, 60-70% of that is interest payments on the home, on your mortgage, then how can you make the argument that it is a home affordability problem, not a home, not the rates, right? It just things that just make me like get all worked up in the morning, which I probably shouldn't. All right. So that was funny in Market Watch this morning. So to me, it's like if even if home prices are high, if rates come down, the $800,000, it's not an affordability issue. I mean, it still will be, right? I mean, if you look into down payments more, it just all right. Rants for other days. Sorry to go on that tangent. So just quick on some individual names here. Obviously, Serve I'll talk about quick. 16% intraday move yesterday, all the way up to 15 at the open, down to 12.88. Bounce closed above $13. I wish it closed over 13.75. I was looking yesterday. The premiums are nuts on the calls. I always say nuts, but on a risk reward basis, trying to find some strikes to play for a move to 18, 19 in the coming week or two. It almost doesn't make sense for me, at least for how I trade, to add some more strikes, considering I still have the Octobers and the January. So I'll just continue to hold those. If we do get some further pull, maybe I'll look to get some more strikes. But my thoughts here on Serve. I think at some point this continues to catch FOMO, $18, and then possibly much higher in the coming weeks and months. So that's Serve, which brings me to JOBY. And JOBY I haven't talked about in quite some time, since the last money-making move that we had all the way up into the 20s at the end of August. Finally looks maybe set to retest new highs. It was bouncing around $14 for a couple weeks, and then finally started to break out last week. I had that news that they were going to get some able to get certifications pushed up in regards to getting some approvals. Just all positive catalysts. And the thing with JOBY, it's like so much closer to a revenue generation than it was in the past, that it's like a lot of the issues with the company it's like de-risked, right? So I think it trades into the mid to high 20s in the coming months. Still have a few October 20s. I'll just continue to hold those. But if it holds over 17 today, might dip my fingers in my toes, right? Excuse me, and get some more strikes there on JOBY. Just a great story. So that one's kind of back on the watch list, which brings Duolingo, right? So no news, no catalyst. To open at 305. Within 20 minutes, it was down to 293, and then it found some support, and then it slowly started to melt to the upside. Got some more lotto strikes to speculative calls, because the 340s were, I think they were $1.50 on Monday. They might have been higher than that in the midst of its move up to 310. I keep saying I think this trade's 325, 350 in the coming weeks. It's just a matter of timing. I don't know if it's going to be this week or next week, but when it does, the call's going to make up. Yeah, they're going to be a couple thousand%, right? And when that happens, it'll make up for all the attempts I'm trying to play some of these weekly calls. So love the Duolingo story. Not going to go on a rant on that one. Lemonade, right? It was Friday afternoon. I was kicking myself for not rolling some more strikes into this week. It was closed at $61. Then Monday, it looked like maybe it was going to break out, chopped around. Then yesterday, I'm watching it into the afternoon, $62 at like 1 o'clock, and then boom, just got pummeled. $62 at 1 o'clock, and then in a matter of 25 minutes, it's down to $58. At some point, again, similar to Serve, it's going to break out 65, 70, 75. And then just shocking, right? I mean, it's up like 300% from its 18 handle a year ago, and it still has the same short interest. So either these folks who are short are very good collecting premium on options and figuring out some ways to hedge themselves, or they're severely underwater and just waiting patiently, right? At some point, you got to think they start to really cover, and that's when it squeezes. So that's Lemonade. I don't know why I have gold up here, but still looking at GLD. Tried to trade it last week for some puts, close those flat. It's up. Was it? It's going to have its best year in over 30 something years. Gold and uh, I'm not going to get into the GLD rant right here. GameStop flat as a pancake yesterday. Still looking to get some more strikes there. And then on the flip side here, I don't know if I should get a T-shirt and trademark the circle jerk thing that I've been uh, saying the last 2 days. But this AI theme and capex spend and energy and all these different things, it's like at some point this circle jerk, there's going to be who's going to be the last jerk in the circle. Part of I'm not trying to use offensive language or what have you, but that's just what it looks like to me. And uh, take a look this morning. Well, overnight, Baba had a. I don't even see a press release, but it was Bloomberg. One of these outlets came out that they're looking to up their capex spend in AI to 53 billion. They have now a new partnership with Nvidia in regards to robotics and things like that. And the stock's going bonkers here up at 176. But just another one of these names that it's like. I'm trying to think. Back before Bitcoin was really kind of mainstream, people, especially some of these penny stocks and small cap names, would use Bitcoin in the headlines for press releases to like gain attention, right? And it's like nowadays, if you're have any piece in the game in regards to AI or any of your business, Amazon, great example this morning, right? They talk about Magnificent Seven, and Amazon's now the laggard of the group, and it's because they're behind Apple and AI. But it seems like all these companies are like almost forced to announce investments and announce things in regards to AI and capex spend just to appease shareholders, right? And appease the market. And it's like, the money's going around in all these large chunks, 50 billion, 100 billion of partnerships, deals, investments. And it's like, who's the last one to invest the money? Where's that? When does this big trail end? So maybe it's not in a couple of months. Maybe it's 6 months, 12 months, 18 months. To me, I think that I wouldn't call it the black swan, but it's like, to me, that's going to be where we have some kind of big pull. All right. So that's the circle jerk conversation, which I'll probably continue to talk about for the next couple of days. But some names I'm looking at, I mean, take a look at Lamb Research. I mean, yesterday was the first red day and was only barely in the red. It was down 27 cents. First red day in September, or since the start of September. I'm not saying it can't continue to head higher. There's another name, SanDisk. Back in the day, used to follow that one. Western Digital, Seagate, SanDisk on a tear too. And it's like some of these names. And you look at SanDisk, and it was a $40 stock like a month ago, and now you have analysts, it's 110, $120 price targets. But it's like, what has changed in a month? It's like these analysts just caught off guard. But anyway, my point is that some of these names at some point, even if a short-term pull, a multi-day pull, there's going to be opportunity. So if we do get some kind of a continuation today on yesterday's sell-off, 660 breaks on the SPY, Lamb Research, Broadcom, probably Lamb Research first for some spec puts. And, I always put my little asterisk or disclaimer. This does not mean I have my bear suit on. It doesn't mean I don't believe that Lamb Research or Broadcom can't be substantially higher in the coming weeks and months. I just think there's an opportunity number one, to have protection. Number two, hopefully be profitable if I do get some put hedges. So that's kind of random. I'm trying to think of some of the other things going on here. So Lemonade, Duolingo, yeah, Reddit. I mean, take a look at Reddit, down to 238 late in the afternoon yesterday. Another name, I don't want to catch a falling knife here, but it's going to be $300. I would say before the year's out. Maybe it happens in November, and it's like, how do you get the calls and then you have to hold them, right? And you could be up 1,000%, and then it drops down to 238. Now you only up a couple 100%, and then you still got to hold. So such a tough one to trade. But Reddit, I'll be watching. TTD yesterday, I was looking for follow through on the bounce from Monday. It didn't show signs of bouncing Tuesday morning. The market was kind of weak, so I closed my calls out flat or for a small loss. And then, ironically enough, it goes up into the 47s. It closes up over 1%, and the calls are still flat. So, not to tough to trade. Stock goes in the right direction. Options don't move up in price. If I do get some more TTD calls, they'll probably be later dated strikes. This way, it gives me some time. So when the bounce happens, at least I'll be able to take part of it. And that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.